Well, good morning, everybody. This is Harold coming to you again, bringing another news alert. You know, talking about the stock market, I'm going to give you an update. Today's Saturday, the 9th, January the 9th, 2016. You know, Kramer's on TV. He's all mad because people are selling and getting out of stocks, and he's calling people names and saying, "Go ahead, mama's boy," or whatever. Run, get out of the stock market. You don't belong in the stock market anyway. I mean, who is he to talk to the general public like that on national TV? And he has his own TV show, and they let him get away with talking like that to people on TV. That's just, to me, that's bad for you, Kramer. So anyway, I want to talk about the last week. You know, Monday I made a video and I said, you know, be ready for the stock market to go down. It's crashing. It's going to go down 1,000 points. And, well, by Friday, we're down 1,590 points on the Dow Jones. Let's see, and the thing is, I'm going to have some charts behind me and you can kind of see them and go along with them, but the breakout point is 15,666. You know, 666, mark of the beast, well, you know, mark of the devil. And if it breaks through the 15,666, then who knows where the bottom is, because that's the next point of where it should get a bounce back, but it probably won't. And the reason it won't is a couple of reasons. Is the stock market is basically propped up right now by billionaires and your tax dollars. You know, I've said this before, and I know you don't want to hear it, but the government over the last 7-8 years, they put probably $2 trillion or more in the stock market to prop up the stock market, because people keep trying to take their profit, and it keeps going down. And every time it goes down and you see it go right back up, that's the government buying stocks. So, you know, and now they've got to the point to where I don't know if they can't buy or not going to buy or whatever, but now they're printing money. They're printing money like 24 hours a day, 7 days a week, and they have to, you know, because they set a budget this year for over $1 trillion, and if truth be known, it's probably closer to $2 trillion. But another thing I wanted to talk about was the oil stock. You know, in 2006, the oil stock was around $60. And it fluctuated up and down, stayed right in there. And in 2008, it goes up to $150 a barrel. $150 a barrel. That's ripping off the American public. So in 2009, it came back down to $45 a barrel. Well, and by 2011, it goes back to $100 plus a barrel and stays in around the $100 range for 3 years. Well, the oil companies, ExxonMobil, whoever, you know, Shell, all those companies, they made trillions of dollars. I don't care what they say about the billions they made trillions of dollars. If they get on TV now and say that they can make money at $25 a barrel, they just have to go back to pumping it out of the ground with the old style wells. Well, isn't that price gouging at $100 a barrel or $150 a barrel? I don't understand that. So yesterday it closed at around $33 and some change. And the predictions are that it's going to go down to $25 a barrel. And I'm not a stockbroker. I'm not telling you what to buy and what not to buy. I just watch the programs. I check the tickers on the computer. I watch the stock go up, go down, and all that stuff. But my opinion to myself is, if it goes to $26 and below, if you're in the stock market or you want to get into the stock market, you know, that might be a good place to put some money, because oil is something we can't live without, and it's not going to stay at that price. It's going to go up. So, you know, it's like trying to catch a falling knife right now, and it's still going down. But I wouldn't even be worried about buying it now. It's still going to go down, but it's going to go back up, and it's going to settle somewhere probably around $50, $60 range. Is probably where it's going to end up at, probably next year. But between now and November, the election, oil and stock prices are just going to continue to go down. Also, the debt. I just want to show you the debt clock here. You know, the U.S. debt. Let's see. It's up $11 trillion in the past 8 years. So we're about $7 or $8 trillion on the U.S. debt in 2008, and now we're at 19 trillion. And if the trend continues by the year 2020, our debt will be $22 trillion. And what that means is that we've passed what our income is to what our outgoing is. You know, the government probably takes in $121 trillion, I think it is. And by 2020, we'll be spending more than $120 trillion. It don't matter, you know, the budget, they can do whatever they want to. But what the government is going to do, they're going to keep printing money. And that's not going to fix it. The only way to fix this is the same way you fixed yours. Is you're going to have to buckle down, get rid of some things that you don't really need, and stop spending more money than you have coming in. So this is Harold, and I'm getting my website going. I've had it up for years, but I'm gonna redo it and make it better. I hope. It's Save America 1776, and you can .com. And you can visit that website if you like and look at some of the other videos that I've found around the web and stuff that I think is good information that everybody needs to know. And like I said, I'm not a stockbroker. I don't have any money in the stock at this time. I'm not pushing any stock. But I do want to mention one thing. Wal Mart is the only stock that really stayed in the green this past week, the first week in 2016. Anyway, this is Harold, and SaveAmerica1776.com. Please visit my website. Please give me a thumbs up, a like, and subscribe to this video, and I'll have another video for you soon. But next week, plan on the stock going down again. I don't know that it'll lose 1,500 points like it did this past week, the first week in 2016, but it's either going to go down or go sideways, or it might be up just a fraction. But the stock market is crashing in slow motion, and we're not really going to get any good news till after we find out who the Democrat and who the Republican nominee is for the President of the United States. And then, depending on what the mass people think, it's at that point it's either going to go up or down a little bit. And then after the election, ever who gets in, Democrat or Republic, it depends on who's got the money and who's buying and selling. If they like that person, the stock market's probably going to go up. If the majority disagree with that person, but they get in office anyway, then the stock market's going to go down, keep going down.